Welcome back to the deep dive.
Good to be here.
So if you're the kind of person, the learner who really demands that absolute foundational truth, especially when it comes to complex systems, well, yeah, you're definitely in the right place today.
hmm
We've got let's say a unique mission this time around.
Yeah, unique is one word for it.
We're not exactly swimming in information, are we? No stacks of articles.
No, not at all. It's, well, it's almost the opposite. We're doing a deep dive, a forensic dissection, really, based on incredibly minimal source material.
Focusing on Uniswap, a huge name in decentralized finance.
A cornerstone, really. And what do we have? A title.
Yeah.
One single defining sentence.
And a couple of data points, that's it.
Exactly. But, with foundational documents like a white paper, especially the core definition, the language chosen is never accidental. It's deliberate.
That's our whole goal then, right? To squeeze every drop of meaning out of the precision of those words.
Precisely. We're treating every comma, every specific term, every number as an intentional clue, applying critical thinking.
Like applying a scalpel to the blueprint itself. We want to get at not just what the protocol is, but maybe what the designers intended its role to be, in the bigger picture of the digital economy.
We're going straight to the core commitment, the ideology baked into it from the start. How do you build something like this from the ground up?
Okay, let's jump in. So here it is. The single sentence. The core definition we're working with today. A fully decentralized protocol for automated liquidity provision on Ethereum.
17 words.
That it?
Describing, well, a multi-billion-dollar economic engine.
Wow.
So let's break that down. I see three main components we need to unpack.
Okay.
The ideology, the function, and the platform it sits on.
All right, let's start with that first part, the ideology bit. A fully decentralized protocol. That word, fully. Why is that so significant? It feels like a really strong stance.
Oh, it absolutely is. Fully is a declaration. It suggests anything less isn't pure decentralization.
Meaning it's compromised somehow.
Potentially, yes. The moment you have a central admin switch, or maybe a server that one entity controls,
Yeah.
you introduce a potential single point of failure.
Right.
Or censorship. Or just, human error.
Right.
So
Yeah.
fully decentralized aims to remove that.
Yeah.
It means no single group, not the original creators, not some foundation, can just stop it or change the core rules on a whim, the governance, the operation. It's all meant to be in the code, ideally immutable code.
Okay, that makes sense for trust.
Right.
But isn't there a trade-off? Like, thinking about traditional systems, centralized ones can be super efficient, right? They can make decisions fast. If there's a bug or the market suddenly shifts and needs a change, doesn't fully decentralized kind of mean slow?
Yeah.
Maybe inefficient when you need a quick reaction.
That's a really critical point. And yes, that's the inherent trade-off. Decentralization often trades that speed, that immediate human oversight, for resilience, for permanence, for trustlessness.
Okay.
The protocol relies on things like network consensus, maybe token holder voting. Those processes are usually designed to be slow, sometimes deliberately slow.
To ensure stability?
Exactly, to guarantee that trustless operation. So yeah, it accepts potential short-term inefficiency. That's the cost you pay for that long-term immutability and security. It's fundamental.
Got it. And what about calling it a protocol? Why not just a platform or an application or a service?
Good question. Protocol implies something foundational. It's a set of rules, right? A standard designed for others to use and build upon.
Like TCP/IP for the internet?
Sort of, yeah. By calling itself a protocol, Uniswap is signaling we are infrastructure, a building block. And this leads to something really powerful in DeFi, which is composability.
Meaning things can stack together.
Exactly. Other DeFi apps don't need to reinvent the wheel. They don't have to build their own exchange mechanism from scratch. They can just plug into the Uniswap protocol, into its rule set. It allows for incredibly rapid innovation. You see that compounding effect across the whole space.
Okay, so what is this fully decentralized rule set? Now let's get to the how, the function, for automated liquidity provision. This is where it gets really interesting, I think. Liquidity, we know, is about making trading easy, but automated, what does that mechanically mean here? How does it cut out the middleman?
Right. This is the core invention, really, the automated market maker, the AMM. Think about a traditional stock exchange, like the New York Stock Exchange. Liquidity there comes from an order book.
Right, where people list specific prices they want to buy or sell at.
Exactly. You put in a buy order, someone else puts in a sell order, and a central system tries to match them up. The market only really happens when a buyer and seller meet at a price.
It's like needing someone to show up wanting to buy exactly 3 lemons when you're selling exactly 3 lemons.
That's a great analogy. Yeah. The AMM flips that completely on its head. Instead of matching specific orders, the protocol uses smart contracts to create these. Well, they're called liquidity pools.
Pools of assets.
Yeah, shared pools, usually of two different tokens. Let's say Ether
Yeah.
and a stablecoin like USDC. And the capital in those pools. It's provided by users, by people like you, who become liquidity providers or LPs.
Ah, okay. So the protocol itself, the smart contract, holds the assets, users deposit into it.
Precisely. And the automated part, that comes from a mathematical formula. Often it's a very simple one, famously sex equals Y equals K dollar.
The constant product formula.
That's the one. This formula governs the price. The price isn't set by orders. It's determined purely by the ratio of the two assets currently in that pool.
So if I buy ETH from the pool,
Then the amount of ETH in the pool goes down and the amount of USDC you paid goes up.
Hmm.
That changes the ratio. And the algorithm automatically adjusts the price of ETH upwards for the next trade instantly, based on the math.
Wow, okay, that's a big shift. That means there's no need for human market maker, no specialist setting bids and asks. The math just does it, 2047.
Exactly, that's the automation.
But wait, if the price is just based on the ratio inside that one pool, how does it stay connected to the real world price of ETH everywhere else?
Right.
And what stops someone making a huge trade and just completely throwing the price way off? That sounds like slippage.
Good points. And yes, that friction is real. The AMM model is incredibly capital efficient, always available, but it does have inherent slippage, especially on large trades. Because, as you said, the act of trading itself moves the ratio, which moves the price within the pool.
So how does it occur?
It relies on external actors, arbitrage.
People looking for price differences.
Right. Traders who spot that the price in the Uniswap pool is slightly different from the price on, say, Binance or Coinbase. They'll buy low in one place and sell high in the other, and their actions naturally push the pool's ratio, and thus its price back towards the broader market price.
Ah, okay. So the automation provides the mechanism, but it needs this kind of decentralized ecosystem of arbitragers to keep it honest price-wise.
It's a symbiotic relationship, yeah. The automation is the engine, but these external participants are crucial for price fidelity.
That really clarifies the automated liquidity provision part. It's permissionless, it's automatic, lowers the barrier to entry massively.
For both traders and for people wanting to provide the capital, the liquidity providers.
Okay, which brings us nicely to the third component, the grounding wire on Ethereum. This seems specific. Could this whole system, this AMM, run on just any blockchain? Why call out Ethereum in the core definition?
Because the environment dictates the outcome. Specifying on Ethereum defines the underlying foundation.
And that foundation provides.
Well, crucially, it provides the security model.
Yeah.
The consensus mechanism proof of stake now, mostly that guarantees the smart contract, the AMM logic, executes exactly as written, no tampering.
Right. If the whole point is fully decentralized code and automated math, you need a platform you can trust implicitly to run that code and math correctly.
Exactly. That code needs an execution environment that is itself secure and credibly neutral. Ethereum provides that battle-tested, robust, smart contract capability. Without that reliable platform, the decentralization and automation promises are just, well, they're just theory.
So it grounds the whole thing in a specific technological reality, the security, the network effects of Ethereum.
Yeah, the global reach, the established ecosystem, it all provides the base layer needed for a protocol handling potentially billions in financial transactions.
Okay, I think we've really dissected that sentence. The blueprint is clear. Fully decentralized ideology.
Yeah.
Automated market-making function.
Yeah.
And all built securely on the Ethereum platform.
Makes sense.
But now we need to look at the other bits of info we got. The context around this definition. Our source gave us two very specific, kind of striking numbers right alongside that core text. 5.806 and 7.75%. These aren't abstract concepts. They look like real-time data.
Yeah. And that's well, it's quite unique for foundational documents, especially in finance. Usually you have the white paper defining the theory over here, and then completely separate performance reports showing the practice over there.
But here they're presented together, side by side.
Right, which is interesting.
So let's speculate a bit. What could these numbers be? They're obviously not random. Given the whole context of Uniswap, that 5.806 feels very likely to be a price snapshot, right? Probably of the UNI token.
That seems like a very strong hypothesis.
Yeah.
The UNI token represents governance rights and indirectly the perceived value or success of the protocol itself. So a price makes sense.
Okay, if that's the token price, then what about 7.75%? Percentages in DeFi often relate to yield.
Almost certainly.
Mm.
That's likely an annual percentage yield, or APY,
An APY for what?
for the liquidity providers. The LPs we talked about earlier, the ones who deposit their assets into those automated pools, that 7.75% would be their potential return.
Wow, okay, that is fascinating. The blueprint, the definition of the system, is literally shown right next to its current market valuation and its rate of return for participants.
Exactly.
What does that actually mean, though? For the core documentation to be so directly tied to these fluctuating real-time metrics?
Well, it fundamentally changes how you view the document, doesn't it? It's not just a static historical paper anymore.
It's alive.
In a sense, yeah. It
Right.
becomes a living instrument. It screams that Uniswap isn't just theory. It's an active, functioning economic engine right now. And for you, the learner, seeing that yield figure, that 7.75%, it immediately flags the risk-reward calculation involved.
Tell me more about that risk reward. I mean, you put money in a traditional bank savings account, you might get, what, 1% APY if you're lucky, maybe less? Here, a decentralized protocol is offering nearly 8%. That difference must tell us something about the risks, right? The risks of doing this automated liquidity provision.
Absolutely. That yield is the market's compensation for the specific risks involved in being an LP on Uniswap. Because while the smart contract automation removes certain risks, like counterparty risk, you're not trusting a specific company not to run off with your funds.
You're trusting the code.
You're trusting the code. But it introduces different kinds of risks. The main one people talk about is impermanent loss.
Okay, what's impermanent loss? Sounds not great.
It can be not great, yeah. Basically, it happens when the relative prices of the two assets you deposited into the pool change significantly after you've deposited them. Remember the 6Y-E is Cataldo formula. It keeps the product constant, meaning it forces your pool share to rebalance automatically as prices move. Sometimes the value of your share of the pool when you withdraw it could be less than if you had just held on to the original two tokens separately outside the pool.
So you could lose potential upside.
Or even see a nominal loss compared to just holding. It's impermanent because if prices return to the original ratio, the loss disappears. But if you withdraw while prices are diverged, it becomes permanent.
So that 7.75% yield is effectively payment for taking on that specific mathematical risk inherent to the AMM design.
That's a big part of it, yes. It's the incentive. It's the protocol via trading fees distributed to LPs, encouraging people to provide capital despite that unique risk.
So the core definition, automated liquidity provision, and these volatile metrics, 5.806 token price, 7.75% APY, are really tightly interwoven. The automation enables the function, but the metrics reflect the reward needed to offset the specific risks created by that automation.
Exactly. Connects the theory of decentralization directly to the very real practice of generating yield and managing risk in DeFi. The protocol's performance is right there, quantifiable, next to its design principles.
Okay, one last piece of context, the timeline note. Copyright 2017-2022, Whitepaper.io. That 5-year window, 2017 to 2022, that feels like capturing the real birth and maybe adolescence of this whole DeFi wave.
It really does. That timeline anchors Uniswap's development firmly in that explosive period. 2017 was early days V1 concept. By 2022, Uniswap was a giant. V3 was out, handling massive volume. It shows how quickly this went from a theoretical idea in a white paper to a multi-billion-dollar reality.
Right.
That span covers the initial design, the launch, the iterations like V2 and V3, the introduction of the UNI governance token, complex fee structures.
Right.
Basically, the journey from raw concept to the mature complex system reflected in those real-time metrics we just discussed. It highlights the sheer velocity of innovation in this space. #outro.
Okay, this has been quite the deep dive, extracting so much from so little. Let's try and wrap this up for the learner. We took that single sentence definition and found it rests on 3 really inseparable pillars.
Yeah, first pillar, the core ideology, full decentralization, that commitment to trustless, unstoppable operation, even if it means sacrificing some centralized speed.
Right. Pillar 2, the functional innovation. Automated liquidity provision. That AMM model, using math and code instead of order books and human market makers, super capital efficient.
And pillar 3, the essential foundation, the Ethereum platform, providing that secure, composable, smart contract layer that actually makes the decentralization and automation possible and trustworthy.
So that one sentence, 17 words, it's almost like a compressed operating manual, isn't it? Tells you exactly what Uniswap is designed to be, how it works, and where it lives. It's a shortcut to understanding its fundamental role.
Absolutely. And maybe that leads us to a final thought, something for you, the learner, to chew on. If the very definition, the core identity of a protocol like this emphasizes being fully decentralized and automated, relying so heavily on pre-written code, on complex math, what happens when something truly unexpected occurs? A threat, an exploit, a market condition that the original code simply wasn't designed for. What's the role, if any, for human intuition, for ethical judgment, in a system designed to run without it? How does a truly automated system adapt to the genuinely unknown? Something to consider as these foundational technologies continue to evolve and mature.
A great question to ponder. Thanks for joining us for this deep dive into Uniswap's core definition.
Always a pleasure.
We'll catch you next time on the Deep Dive.